Now, when you check out that wall of worry, well, you know, there's this, you say we're late in the cycle, might be something of an understatement. Which assets do you think are most poised for a correction?
Well, I think when you look at the wall of worry, it's probably, there are a few other things to think about. One of which is that we've been in as benign an environment for many years as we have seen in the last 25. We have risk-free and credit spreads tighter than they've been in many, many years. And so the real question is, what is the thing, whether it's on the wall of worry or not, that's going to be the thing that's unexpected by the market that triggers finally an appropriate pricing of risk? Mm-hmm. There are many, many assets that are kind of grossly mispriced across the securities world, from mortgages to leveraged loans to CLO equity to subprime auto. So the question is not necessarily, is there an issue? It's kind of, you know, where is it going to start? Mm-hmm.
Well, maybe we can take some cues from the bond market. Do you feel that that bonds are adequately priced at the moment, U.S. Treasuries particularly?
Well, ultimately, I think it's interesting that finally the market is saying there's no more left to steal either from the future or from savers, and so it's pushing on a string. People have talked about how basically suppressing rates at this point is like putting lighter fluid on an asset bubble fire. And so at some point, hopefully we'll see a return to reason and an appropriate pricing of risk-free that then floods through the entire term structure of interest rates.
And as we continue to see these trade tensions, we are now hearing business leaders become more and more concerned. I was really surprised to hear from the CEO of Cisco, a company that has been pretty resilient despite the tariffs and the trade tensions, talk about a shift that he recently saw in the macroeconomic picture. Take a listen first.
Some slight early indications of some macro shifts that we didn't see in the prior quarter.
How concerning is the fact that we continue to see this downside trend in business investment now falling for the first time since 2016? Will this be felt in the markets as now we continue to see earnings getting eroded pretty soon?
I think it may. I think you're starting to see some cracks in the system. You're seeing certain companies within the high yield and leveraged loan markets who are kind of reporting sudden downstrokes in earnings. We're seeing certain small cracks out in the system, but it's still very early, and I would stress that it doesn't require a material change in the macro environment for there to be a change in perception of the appropriate return per unit of risk.
Will the Fed come to the rescue as markets hope that it will?
I don't know how much more of a rescue it can provide. I don't know how much more craven it can be, responding to either bureaucratic or political concerns. What we'd love to see, I think, as a long-term investor and folks who were kind of bullish on appropriate macroeconomic policy is someone like a Volcker 1.0, who comes in and actually says, here's what's right for the long term instead of what's right for the next few weeks or few months.
Well, let's talk about some opportunities now. Or change to a slightly brighter subject matter. You see some opportunities in Hong Kong, which seems a little counterintuitive right now, considering how fluid the situation is.
Sure.
At worst, we're at a potentially historic inflection point there.
Yes.
You're very brave.
Well, we're drawn to volatility. So we see opportunity in things like Greece and Italy, in the banking system here in Australia, and actually in particular in New Zealand. And within Hong Kong, what's interesting is that, as an example, given the relative explosion of high-yield corporate debt in mainland China and the Connect program between Beijing and Shanghai and Hong Kong respectively, there are very few other ways that are, let's say, relatively easy for mainland Chinese corporates to access capital than through the Hong Kong listed market. And so as an example, we're an investor in various structured private convertibles with listed entities in Hong Kong and throughout the world that allow us to kind of be the recipient of their great need for capital.
Dan, just really quickly, you like even Korea right now celebrating Liberation Day. Of course, they have their own issues with Japan at the moment.
Yes, we've recently made an investment in Korea that will allow us to kind of provide loans to a lot of middle market publicly listed borrowers in Korea. We've always found it to be a pretty stable market, very pro kind of economic growth, et cetera. And we think there are real assets and real businesses there to finance.